Hi, this is Karen from firmTRAK Solutions, and I'm joined today by my two partners, Richard Marvel, who's an attorney, and my other business partner, Brian, who's also an accountant, and I'm an accountant. We're all founders and partners here at firmTRAK. And today we've had some interesting conversations and kind of more like a Q&A session. So Rich is a solo law firm, so he has his own business, and he had some interesting questions for us today. So, Rich?
Yeah, before we started this morning, I'm thinking at the end of the year, like a lot of small businesses are thinking, as far as, okay, what do my profit and loss looks like? And what kind of income does it look like I'm going to show for 2025, which would potentially, generate and trickle down into income tax for me personally, that I would have to pay based on that income. So we had a discussion, Karen, we were talking specifically about the bonus depreciation extension and how that could impact law firm and other small businesses like myself. But selfishly, I was curious to try to understand exactly how that worked, because when I think of bonus depreciation, let's use a classic example for an automobile. If I buy a car that's in excess of 6,000 pounds, I know that I have the ability to bonus depreciate that and take the 100% deduction for the year, so say 2025. Now I understand that to now include a variety of other assets or equipment that I use in the business, say, for example, computers. If I wanted to get buy computers for $25,000, I asked you, I'm like, okay, well, I want to buy the computer for $25,000. I'm showing income for $25,000 that I would like to offset for 2025. But the reality is I don't have the $25,000 cash to go out and buy the computers to then offset my income. So my question rated down to, okay, so if I don't have the cash, I want to take advantage of the business depreciation or the bonus depreciation in order to lower my income for 2025. How does that relate to financing? And how or what kind of limitations do I have with my financing? And what does the financing do, say, for 3 years? If I finance the computers for 3 years now, I spend $25,000. I take the deduction, I lower my income for my business, but then I have this debt service for the next 3 years. So in my mind, I was confused on kind of the interplay between those two and how the bonus depreciation works for, say, this year, and then also how the interest payments or the loan servicing would then impact my financials for, say, 2026. And for me, I just didn't quite understand it. And I think for a lot of small business owners, they don't. And I think for me personally, this is a good thing for me to try to understand today, because if I understand it today, then I still have a little over 2 weeks to try to decide if there are some purchases that I want to make. And I think it would be helpful for a lot of small businesses to try to understand how this actually works. And your answer was very enlightening to me, and I think it would be certainly helpful for others that may watch this video to understand how this works.
Well, I think the biggest question is, as always, how do we reduce our tax liabilities, not only in our businesses, but also in our personal taxes? The example of buying the computers, let's say you're spending $25,000 on new computer equipment. Well, you can take that as cash and then put it on your books as an asset and take the $25,000 depreciation expense for the bonus depreciation. That's one transaction, but your asset account then would be a net zero. It just zeroes each other out.
So under that scenario, I literally am sitting on the $25,000 cash, and I want to remove it from, say, my operating account to get the depreciation, so I don't show that $25,000 and I'm actually tangibly holding as income.
That is two separate situations. So you would put the loan on the books as a liability, and then you would pay that loan down over time. But included in that loan is going to be interest, and the interest is expensed over the period of the loan. So if it's 3 years, you're going to be taking interest expense on every payment you make, also reducing your income. At the same time, you bought the computer, so you're getting the bonus depreciation and you're getting the asset. So again, those are two separate scenarios on how you can mitigate tax liability, but at the same time, keep your assets and your equity in the company up. What are your thoughts?
Yeah, I was, to follow up with that. So I'm curious. Okay, so I understand the borrowing. Now in 2026, I've got this loan. I'm making loan payments, but what you're saying is I don't deduct the totality of the loan payment. I can only deduct a portion of the loan payment, and that portion is what you're saying is just the interest component.
No, it's the principal. You're paying down the loan, the principal. Every loan or financing has a principal amount, so $25,000, and then they'll tack on 2.5%, whatever it is. The 2.5, so you're borrowing actually like closer to $28,000 or whatever. Okay, so the loan's actually $25,000, but the payment's going to be 2 to 2.5% higher than that. It's that additional interest that is the expense. You're still clearly paying down the principal of the monies that you finance, but the expense comes in with the interest portion of it.
And that's the portion that would be deductible in 2026.
And for the life of the loan.
The interest component of that, not the pay down of the principal.
Correct.
Okay. And Ryan, you were trying to structure this, and I think you both were saying this, that these are completely two separate concepts. And I think a lot of people understand this to be somehow interrelated, but these are two, there's a wall between the depreciation and then on the finance and how that relates.
Yeah, I always just think about, you're basically creating two separate transactions. And this is how, as an accountant, I always think about what happens to cash. So you receive money, that's a loan, that's one transaction. You spend money, that's a computer, that's an asset. Even though you might not actually receive the money, you might walk into the computer store and they finance everything and you only receive the computers. But essentially what you're doing is creating two separate transactions on your books, and they go from there based on the tax rules. And bonus depreciation changes, and interest and principal is just the terms of your loan, and that's what you sign for up when you get the loan. And so I don't know the history of why loans aren't tax deductible, but I'm sure there's a reason from many decades and centuries ago of why those aren't tax deductible. But even though you are spending the money, so
this is really.
It's brought up a lot of interesting questions with the Tax Cuts and Jobs Act that was passed in July of this year, and just they're changing a lot of the tax rules, and you kind of have to juggle all these different buckets of income and deductions on your taxes, as well as just the operations of your business. So as a business owner, you're always spinning plates, and it can be easy to lose track of the new plates the government may have added or taken away over time.
As a business owner, how this applies to me is, and this is how it's really important. I do have the benefit of the both of you being able to advise me, and I'm able to get wonderful reporting on a monthly basis that gives me the insights into what's going on in my own personal business. And because of the bookkeeping and because of the service that you guys provide to me, that I'm a benefactor of as we continue to do this, I can see before the end of the year what kind of potential profit that I'm going to have to incur on my own personal income taxes from my small business. And the only reason I have that is because I am up to date on a monthly basis to know where I'm at. So prior to the services that I'm able to obtain and the bookkeeping services that firmTRAK Solutions provides, I was like every other small business owner where I waited until, say, February 1st before I started to reconcile all of my expenses and income from 2025. So that related to a point where it's almost like I'm watching a crash happen in front of me, and there's not a thing I can do about it because I don't know what my financial picture is for 2025 until the next February, say February for 2026. And by that time, no matter how great of an accountant you are, no matter what you can do as a business owner, it's impossible to change any of the expenses that you incurred in 2025. That would be fair, right?
It's very fair.
Right. So what you're telling me is I can take the information that you provide me from firmTRAK Solutions. I can get a quick picture immediately of potentially what my profit is going to be brought down on my personal income tax that I'm going to have to incur. And I can make educated and informed decisions right now before the end of the year to determine whether or not I want to acquire any business assets that I may want to use on my business or something that I want to take bonus depreciation of. And the only reason I'm able to determine that is because I have the insight based upon the reports that you guys provide to me. I mean, and for that, I am very grateful. And I think a lot of small businesses would gain a lot of insight, information, and important ways to reduce their tax liabilities. And I'll be honest with you guys, maybe the cost of the service quickly can be consumed by a little knowledge and being able to offset income for the next year. So I think there's a lot of small businesses that could really take advantage of this information. And these are the types of services that firmTRAK solution provides. I mean, it gives you insights to make better decisions to make your business better, and also to actually reduce potentially income taxes that you're going to have to incur on your own personal return. So, I mean, I think this has been a great conversation.
Yep. Again, Ryan, Rich, thanks for the questions, and thanks for participating in this little Q&A. We're from firmTRAK Solutions. Look us up on any of the social media sites at firmtraksolutions.com.
Yeah.